Hello, everybody. Welcome, welcome back. I hope you guys are having a good week. I know this week has been all over the place. Started the week off really, really strong. Then we just died off today and yesterday. But let's see. Let's get some time and let's take a look at what the market is doing. I need to research it up too, and doing this session will allow me to both me and you guys to look at it. So give a few more seconds, see if anybody joins us tonight. Have a good look at what the market's doing, especially the stocks that we are playing. This time of year seems to always have a lot of turbulence. Just so happens that the last few days has been having a lot more. Pretty crazy. All right, I'm gonna jump right into it. Let me share my screen with everybody. So, as I always like to begin, I like to begin by looking at the heat map of what has happened today. Gives me a general sense of what has happened in the market. We can see all across the board of stocks in the S&P 500. We seem pretty flat. We do have some sectors that are red, right? So healthcare, um, consumer discretionary is I wouldn't say red, but the two big ones in there, Tesla and Amazon, they were a little bit red today, right? Tesla being down 2%, and uh, Amazon being down a little bit too. And we have our technology sector here, right? Nvidia was green, but Microsoft and Apple were down today. Probably why we saw a huge drop. Right? I was in and out of the market today, so I wasn't following it too closely. But we see financial is doing really good. You see a lot of green, bright green here. Facebook jumped up. Energy is doing really good too. Hey Kong, how you doing tonight? PayPal is doing good. So after a while, I know that PayPal has been hurting. So, let's jump right into charts. Right? So on Tuesday, I was giving my thoughts of what was gonna happen within the next like 3 months, and let me bring out my annotations tool. Right. So I said that the highest that we're probably gonna touch is probably 485. So right here in the next 3 months. So until like April. April is here, right? This is April. So the first quarter that we're just talking in this time frame right here, right? In this time frame, what I think is gonna happen. Right? So in that time frame, what I believe is gonna happen is we definitely did drop, right? This is a good area if you think, but I think the lowest that we could probably go is probably down here and still be safe, right? But ultimately, I think we're gonna just do something like this, right? We're gonna play in this range, right? So extending this out. So I think we're gonna do that, and we're not gonna make any new highs until a lot after this. So maybe beginning of May here. So this is May. So we're not going to make a new high. We're going to break this. We're not going to break this until May, right? So we're not going to go here. So we're not going to see a move like this until May, maybe, right? So that was my prediction. So just to reiterate on that, and we sort of do to see a fall. I didn't expect the fall to be that fast. So here, right? If you are a person like me who likes to play the 50, this purple line right here is the 50, right? And then this yellow is the 200, right? So usually I like to play the bounce off the 50. This is the daily chart only. So this is you're thinking about maybe a few days swing, few days swing, or something that's gonna be a few weeks, right? It's not gonna be anything that's gonna be a few months because daily it could go. So this is right here will be a good entry, but this is a long only, right? So this is long position. So entry here is a good entry. And you want to set anywhere between here is your stop, right? So based upon how much you are going to allocate to a losing position, right? It could be anywhere between, looking at the chart, right here, be 160, 460, right? Which is like literally just right there. So it's about $8 down. Or give it a little bit more breathing room. Go all the way to 455, right? Because you see, here, my pen back. This right here could be anywhere your stop. The deeper you go, the more breathing room you give it, but the more it also, the more chances of it breaking market structure and then not coming back. Because if we go back, right, I'm going to erase all this. Right? We want to keep in mind that market structure, this market structure so far, right? Every time it comes to the 50, sometimes it bleeds a little bit, but it does these bounce, right? So we want it to the structure of it. It's keeping this form, right? So if it comes down, this time line is not exact structure, right? So if it drops, or if it drops here, drops here, and below here, that's where we want to cut up the trade. But if it comes from here, right? Eraser. This over here, right? Currently, we are here. We are predicting that it will go like this, but we're setting a stop so that if it breaks this below here, it ends our position. So that is how I will play this out. And this is just based off what I saw, seeing it, what price has been doing before when it approaches the 50. Sometimes it bleeds a little bit, and that's why we're giving a little bit breathing room below here. Your stop should be in a place where the market structure breaks, right? I believe market structure breaks is somewhere down here, right? So you see here, it's been a few times, right? If we were to look back, if you had a stop in place here, if too close, it would get taken out with just something like this. Doesn't mean that the structure was broken. It's just you just get stopped out. So here too, right? So you give it a little bit breathing room, right? You keep it going. So something like this right here, maybe if it was too big of a drop, you would have been taken out. But we're essentially playing this kind of move, right? Every time it comes to 50, you get in, and you play it up to the outside, right? So these right here is the entries, right? So this is the kind of structure that we're playing, we're looking to play, that it continues. And when something like this happens, if you had your stop, like say your entry was here, but your stop was just right down here, this would go and stop out, right? And then no entry here until you get to here. Then you set a stop down here, right? Somewhere down here. And you can see, you get a few days trade out of that. So what I'm looking for is setup right here. It is a little scary, especially if you are a new trader, because the concept of thinking about your losses first is new to a lot of people. Especially when I know for sure when I started trading, I thought about my gains first instead of my losses. But if you think about your possible losses, that gives you the advantage of not being worried about the trade, because you already plan to lose a X amount. So you can let your winners run a lot longer, right? You're not gonna be telling yourself, "Hey, I'm gonna just take it at 30% or something," right? You're gonna try and let it run as much as you can. All right, so that's the daily. That's a good setup on the day. Now we want to dive to our hourly too, because as you can see, sometimes when you look on multiple time charts, they tell different stories, right? So Monday, Tuesday actually, Tuesday, I said that this range right here was a sign of weakness, right? Because it was staying in this range. We were used to seeing it move this way, but to all of a sudden see it move in a range like this was a sign of weakness, meaning not so much people are buying into it and keeping into it. So that was what I saw and I was talking about on Tuesday. And it just so happens that I was correct that it broke through below here. But on the you could see that both the two charts are different, telling two different stories, right? The hourly, you know, is 50 here is below the 200, right? 200 here. And then here is a 50, right? It's below. So the kind of thing that it's telling you is that price could continue lower, right? Because it could go from here, could use this as a resistance, right? Could be a resistance line, and price could do this, shoot down some more, right? But when you see a conflict like this, what I like to do, and I don't know if you would play the same way I would, but this is what I would do. I would tend to look. I'll always go with the bigger time frame. The bigger time frame usually gives you an indication of what the big people are doing, because you gotta keep in mind that um, the big whales, they can't move in and out as quickly as we do in the market. So an obvious sign of support on the bigger time frame will always rule out more than a resistance on a smaller time frame. Now that's not always true, but I have noticed in my experience that often it's better to go with the zones on a bigger time frame. So right, so anything on the monthly will be better than the weekly. The daily will be better than the hourly. Right, not always the case, but has some truth to it, because you an example of this would be, where we see a downward movement on the hourly, but all of a sudden it just hits a wall, right? It just hits a wall and then it bounces back up. And we don't, if you were just too focused on the hourly, you wouldn't be sure why that was happening, right? So a lot of things comes in play, right? So we have, let me do this here, draw a circle here, right? So we see, right? So these are areas that we're going to be looking at, and this is on the hourly. So we want to see what they look like on the daily, right? So on the daily, zoom in. See, so on the daily, you could see that it coincide those area coincide with this right here. It used to be old resistance here and became new support. Now, I always advocate that these support and resistance line, they're not so much just a line. The line is just there for our reference, but they're more of a range, right? Because it's not just a flat price most of the time. It could be a zone in, a few dollars down and also a few dollars up. It's not an exact line. The line is just there for a reference, and it could be a few dollars above and a few dollars below. So you give it $2, $3, $2, $3 to the upside, $2, $3 to the downside, and it's a zone. So these areas on the hourly coincide with this on the daily. So you can see, and if you were just too focused on the hourly, you'll get hurt because, as you can see, you know, the 50 was moving below the 200 here. So that's a bear sign, right? And we see it moving straight down, right? And then all of a sudden, just like that, boom, a couple hours, it just shoots up. So you wouldn't have a clue if you were just too focused on the lower time frames. Now, this is true for the hourly. It's also true if you are looking down into the 5 minute. But the 5 minute, if you're looking at the 5 minute, you're trading very too fast to where the daily doesn't really matter too much. The zones in the dailies don't come into play too much and when you're playing the 5 minute charts. Right. The 5 minute charts, I will look more towards like the 1 hour chart to see where those zones are. Because you can see, one of these candles is like, was it 30 something 55 minute candles or something like that, right? So that's SPY. And so two ways to look at it, right? If you're looking at the hourly, it could continue downward, but at the moment, it's right at that 50 for the daily. I would rather play the 50 on the daily, but that's up to me, right? That's just my thinking. Don't have to do the same. And ultimately, I could be wrong. I've been wrong before. So that's SPY. Let's take a look at NVIDIA, because it was one of the green ones today. Now, two interesting. It's at an interesting spot, right? So we will ignore these lines right here because we have broken down below this support. Well, this resistance support here. So we're paying attention to this line. This was where it gapped up from. You see that big giant green candle here, right? It gapped up here and then boom. So gap fill here. That's the first gap. Second gap, a little bit of gap right here, but it came back right to it, right? Right into that zone. And then it bounced. So this is a good play. If you play it, so here, right? And this is when I'm talking about the zones where this is a support line. The 50 is a support line, but it's more of a zone. And as you can see that I drew this line right here, support line right here. But it doesn't come to it, and it came right before. So this green candle was how we can play it is we can get in. Could be our entry, right? Our entry, and where we will set our stop, where I will set my stop, right on here, right? Now, Nvidia is an expensive stock, so I would necessarily how I would play it if I wanted to play options, right? And say right now it's at 280, right? I wanted to play options, and I always want to play it with a 2% risk to my account, right? So if 2% risk to your account is So let's just say we have a $25,000 account. Okay. All you want to do is times it by 0.02. So you know you can only risk $500 on that position, right? So depending on how much $500 is, right, to you, or well, it's 2% of your account, but depending on what you can get, right? You can get shares where you get it at 280 here, right? You get your erase this change. Okay. So entry will be around 280, right? This is our entry. So we know we can only risk 200 or $500, right? And we want to set our stop somewhere down here. So right here coincides with about 270. So it's about $10 risk, right? So you take 280, right? And it's 270. And this is your risk per share, right? Right. So you know you only want to risk $500. So you take $500. Oh, $100 divided by 10, right? You don't get, if you were to buy shares, you can only buy, what is that, like 50 shares? 50 shares? Right. Yeah, I'm gonna calculate again. I can do math today. Yep, it's 50 shares. So you can only get 50 shares if you were to buy it. And then you set your stop at 270. And as long as it doesn't touch 270, you're good to let it keep going, right? So as long as it never comes back to 270 and it just does this, you keep holding it. Right? That's one way to play. One way, that's with shares. I prefer shares. Shares allow me to keep it simple and to stay with it. Right? But I know some people, they prefer options. Now, you have a $500 risk, right? To keep things simple, what you could do is, when you're trading just the options, right? And it's better to go a little bit more out, maybe a month, or at the very least 2 weeks, right? You have $500 to risk, or $500 of risk of allowance to you. So you can get something that costs, that mm, costs, right, around $500. So this $5 right here. So if the price you see here is times by 100, so you can get this right here. There's 295.25. I mean 296.25. That's a strike that you can get, right? If you're just going completely naked, naked meaning only just a long strike, right? Right. So that'll just be a $500 risk to you. And if it goes to complete zero, you're only losing 2% of your account. But if it goes more above that, you risk it's a risk defined trade. So you put in $500 that you're willing to risk, and you just let it go for however long. But if you want a safer route and you don't want data to constantly eat at you, you can turn it to a spread too. So a spread is basically you buying one, right? Buying one and then selling one. So, and you can go deeper, you can go closer to at the money with this, right? So a spread, you can get the $10 here, and maybe you sell this $8 here. So you pay the difference. So you're buying this with $10, but you're getting a $8 credit here. So you're only paying $200 for it. So you can get at a maximum two call spreads, thinking that it's going to go to the upside, right? So that's three ways that you could do it. You could do spreads, you could get shares, or you could just get a straight up uh, naked call, right? The naked call will probably move the most, but it's also susceptible to time decay. Time decay will eat at it, constant rate. How you could tell how much you're losing every single day is if you look at it, this variable called theta. Theta right here, right? So theta here. And so every time everything is times by 100. So you're losing about $3 every single day. The closer it is to expiration, the higher theta eats at your contract's value. So keep that in mind. If you're doing naked, if you're doing a spread, theta still eats at both of them, but they both balance each other out. So that theta isn't too crazy, right? You're not seeing anything in dollars. Maybe you're seeing like a few cents, barely noticeable theta burn. And if you're doing straight up shares, my preferred way, you're getting a lot less, but you get the safety of mind of keeping it very simple. Right? And trading, the more simple you can keep your trading, the better it is. Even though you could trade off for a little more complexity for options and get a little bit more. To me, it's not really worth the headache of and stress of always thinking about time decay and uh, the how volatile the market could be, especially in a time like this where you have huge swings in the market. You don't want to do that. You have to deal with both data and the volatility, right? So that's Nvidia. So I think it's a good pickup. And this is on the daily. We're also gonna dive down into the hourly, right? So on the hourly, and man, it's just showing these bounces on the hourly pretty well. If I didn't draw these support areas out, then you would never have known that why it keeps just bouncing off of this. Right? So looking at the daily shows us, hey, this is this could be a reason why it was bouncing. Right? So you can see here some bounce here, this bounce here. You could even argue that this could be a higher low. Right? You can see it's going towards that 50 moving average again to the upside. But it could definitely be like something like this, right? Where it was here and then shot up and then boom, right back down. Anything could happen, right? So this is what it looks like on the hourly. Hourly, if you want to play it, right? I'd say it's limited here, right? So from 280 to maybe 265 at the very lowest, or 266, about $20 range. $20 if you're just playing naked calls and puts, that's a big range. You could, if you're quick on it, you could get in and out a couple $100 every single day, right? That's Nvidia. Facebook. Facebook, it's been interesting too. And I said on Tuesday that this is a good pickup area, and it's still proving itself to be true, right? So this area right here, from 200, right? This is a good area to pick it up at, right? Showing good support here too. We have times where it bleed down a little bit. This is bad, but think of it as this right here was a given, right? A, g- uh, God, I mean, a good luck giving thing, right? You were blessed if you caught it down there. Here too, right? Below here is good. It's good to get it here. It's even better to get it down here. And I also mentioned on Tuesday that this is one of my favorite plays. When on the 50, on the weekly, it's sitting right at the weekly, the 50 weekly, right? So right here is where one of my favorite plays is. I tend to like to play positions where I don't have to manage it too much. You know, aside from my initial look at it and then setting in my stop, and if it hits the stop, I get stopped out. If it doesn't, I just let it go. I like having plays like that. I don't have to stress too much about it. So Facebook is still a very good pickup right now. Okay, right, up here. This is your entry. So around 330, 340, right? Entry. And your stop, there's two ways you can think of this stop, right? You can think that this right here is the lowest that it can go because it was support. It's just set a stop right here. So this right here is lining up with 230, 220, right? So a $10 risk. If you're getting it at 330, so $20 risk if you're getting at 340. But you could also play it that, hey, this was the absolute bottom to give you that safety, right? It depends, right? So this is another $20 too. So, it's a pretty big range from your entry to here or from your entry to here, right? There's two ways you can set your stops. You can set it for sure, a position that's down here will allow you to stay in that trade a lot longer, but it lets you get less shares and less options if you're into options or less spreads, right? Because it's much more of a gap between your entry and your stop, right? So this right here could still good pick up. If I were to get into it, if it was just for a few days, I would stay with this stop right here, this 320. Get in here, right? And it will play for up. I hope that it goes back up to here. This little resistance right here at 350. Hoping that it breaks this 350, goes up to here, and then maybe get out here, right? Because if it goes to here, this was a resistance area here before. So, very good pickup, especially in higher time frames. The daily, the weekly. But those time frames you have to be very patient on. It could take a few uh, a few weeks to even months to develop out of it. Right? But your patience in it will pay off. And you can see here, we dive down to the hourly, right? So this downtrend right here, this little downtrend right here is showing weakness already. We had it come down to here, bounce off this, and it right today, after hours, we're seeing it use this as support to continue to the upside. Now, it could be a very good prediction that tomorrow Facebook might continue up, right? Continue upwards. Maybe it might be going to test 350 again for the next few days, right? Tomorrow's Friday. I don't know. It'll take a tremendous day for it to get to 350 on one day, but the very peak we have tomorrow's Friday. Maybe 342 is good, and then 345 if it's a great day tomorrow. Great day to the upside. Right? It's Facebook. Now let's take a look at PayPal. Now PayPal, I slept on that for a while, but we want to continue watching, and it looks ugly on the daily because it's been trending downward, right? Doing this lately, but the good thing is it looks like it found some support here, right? So it goes right into this range, and this range has been there for a while. This is where, if you look on the monthly, this is where it broke out from, right? Broke out from here. Right? So this range, it was playing in this range for a few months. Now it's right back in this range, and it also lines up. It lines up with 50 monthly, right? And that goes right into the 200 here. Play would be the play would be setting this as a stop at 180. If it drops below 180 again, get out of it. Right now it's still pretty close. $10 from $10, $12 from 180 right there. this entry, and then the stop. Right? So $10 risk. So it gives you two good, one good play out of it. Right? PayPal is a good stock to hold. Payment processor. Right? So let's look on the. So on the hourly, you can see these lower highs that are forming, right? So this downtrend is showing weakness, right? Because you can see, right? We're doing this before, and then it just hit this spot right here. So then it's keeping in this range, and it's getting higher each time. So it's getting tighter here, and it could just break out of it. Right? So that's the prediction of the lower time frames of hourly. Gives you a good swing for a few days. Let's take a look at Apple. Apple's falling, and it's not a bad thing for Apple to fall. And why I think it's not a bad thing is, you got to watch the traveling up for a while, right? So did this move? So now I want to see what it does when it approaches this right here. This is the 50 moving average. So the 50 moving average is at 66, 166, 165 range, right? This range right here. Well, I wouldn't have a huge range, but tall area right here, right? This area. So I want to see what it does because it could go to here and then boom, takes off to test this high again. So you can see, right, triple top here, and maybe when it goes back to this high again, it might boom die down again. Right? We could see a bounce in this range right here for a while, right? A while to April, right? Or if it goes down below here, this could be another play, right? The better support here, and then it just does something like this for a while, right? Something like that, and then takes off again, right? Two possibilities. So it's either going to play in this low range, or it's going to drop down and play in this low range. That's my outlook on Apple. I wouldn't necessarily pick it up just yet. Today's candle is actually pretty ugly on it. It's a falling star candle. It's a falling star or falling hammer, falling star. Is where you see the body of it is close to the bottom of the candle here, and then a giant wick up to the upside, meaning it went up in price, but it got sold off. So that's 3 days in a row, right? 3 days in a row red. And this candle is a really, really bearish candle. See it fall here. So my suggestion is to look to see if there's some support at this 165, 166 level. We dive down to the hourly. The hourly is showing that it's beginning to cross, right? So across here, because we on the daily we don't have any big support coming in yet. Not until maybe 170, but I don't even think 170 is a good support. I think 165 is a better support. So 165, that 165 range. So on the hourly tomorrow, this could it could do this, right? Just bounce off here, but it could tomorrow. Tomorrow's here. It could do this before we see next week comes back down here. Okay, that's my thinking on Apple. Or completely wrong, and it just goes oop, back to all-time highs. But yeah, that's what I think about Apple. Apple's still hanging in there. The good thing about Apple is there's so much support on it, and sometimes it doesn't keep well to the 50 because you see here, there's multiple times that it bleeds below the 50, but then it just gets bought right back up and just slowly grinds to the upside. Whenever it goes up, it slowly grinds up, but when it drops, it has a pretty steep drop. You can see here, right? Pretty slow grind up and then boom, drop. And then it gapped up here, but then slow grind here, boom, steep drop again, slow grind, steep drops, right? That's the pattern with Apple. Apple likes to do that. And it's a good sign though when we see these steep drops. Try to look at where support will be so you can pick up shares. You want to know where you want to pick up shares at. Apple is a powerhouse, so you never really want to short it for a long time. If anything, you could be like me where I'm mostly long. I rarely short anything when it gets put on anything. Just a better way of playing for me, less stress. Right? And now, last one, we look at Amazon. That's one for me. And man, I'm really hoping it bounced because it's still keeping sort of in line with this right here. Right? This right here. It's still trying to keep this right here. But the candle is an indecision candle. So it's what's showing is that we've been falling, but it sort of just got to a support area or some support area here. We could very well see it start to go into the upside again tomorrow or the beginning of the upside. So looking at here, right? Something like this, down and then boom, stays here and then shoots up again. I think that could happen. Right here, right? Here, down here. Amazon's been doing this. It's been playing in this range, but this range gets a little higher here. So I still think it's a very good ad. I said on Tuesday that it's a good ad up here, but I think it's still very good to add it here. You just gotta be very patient with it. It hasn't had a huge move out of all the big techs. This, I believe, um, Amazon is the one that needs to have a good big run. It's been consolidating for a really probably like a year and 6 months or a year, almost a year and a half. Right, this whole consolidation period right here, right? This this right here, it's all consolidation. So I believe we're building up to a big run, right? And we see this range on the monthly too. We see on the weekly too, right? These zones that I think it's near just gonna blast off from. Reason I think that the reason I think that is if we look at let's look at the monthly, right? And past data does not indicate future movement, but it gives you a good indication of what could happen, right? It's not going to perfectly line up with what has happened in the past, but gives you a good indication of what's going to happen. So we see this right here, right? This is a very long period of consolidation. Also, it's about almost a year and a half also of consolidation, right? This right here and this right here. So at the end of both of those was a long run, right? And this was a long run that a long run that led to this consolidation right here, and then a little shorter run that runs into this. So I think the next run we could probably go all the way to 4,000 or even a little bit above 4,000, right? That's what I'm seeing, and uh, it might not necessarily happen, but I think that's what we are due for. That, or we just you know trade sideways for another year or so. But I think, the longer we stay in the consolidation period, the bigger the next run will be. Right? It's gonna be a huge run. So if we continue going into this consolidation period for another year, right, all the way out to 2023, right? Draw this out. We stay in here about all the way to 2023, and we have a run. And when we do have it, it's not just gonna go to 4,000. Yeah, it's gonna take off even more. Right? That's just my thinking. Right? So the next thing, right, to make it smaller. Right? So if we go all the way, stay in this range of 2023 here, when we do break out of this right here, right? I think we'll just keep going. So at this a nice slope growth rate like this. Right? We'll take out 4,000, 4,500, 5,000, maybe even 5,500. But that's if it doesn't split, right? And it just doesn't. It just stays. If it splits, then it resets the price. Well, it doesn't really reset the price because it just makes one share into however many shares. It looks like it cuts the price, but it's still the same amount of shares, right? If you're holding one share and it splits for 5, you're holding 5 shares, so you're still ending up with the same amount of money. But it just makes it so that it's a more affordable for people. Not too many people are gonna want to buy a share of Amazon if it's at 5,000, right? But if it does, let's say if it does a 5 to 1, so there's 5,000 here, or this, we'll just go with today's price, right? Let's do the calculation on it, right? So it's 3,300 by 5, so it breaks it down to 600. Okay. Would it be even better if they do a 10 to 1 split? So it breaks it down to 300. Right? 10 to 1 introduce a lot more shares, right? There's a lot more. The pool is spread out even more, but it makes it more affordable to people, right? So when it becomes more affordable to people, people are gonna trade it more because who wants to pay $5,000 or $3,000 for one share? But if it goes to 300 or it gets split to 300, definitely for sure, people will be trading a company like Amazon. Right. So we ended here with Amazon. Um, you know, even though we look at the charts, it's just to give us and a few potential plays and a plan of attack for the market. It doesn't necessarily mean that those things are going to happen accordingly, or it doesn't mean that it has to happen. It just gives us a plan of attack that if this happens, then I'm going to do this. And when you have a plan like that set out, then when it gets to that range, you you can either have your orders set in place, or you could just jump at the time, right? Instead of just winging it, you know, here and there. if you win here and there, you might win some, you might lose some, but it makes it so that you're never really consistent. But if you have a plan of attack for the market, even if it doesn't go your way, most of the time when you play your plays and you get better at it, you can improve upon it. You can say, hey, um, you could say, using SPY as an example, hey, I was looking at this 50 for this 50 moving average as an entry, and I set my stop here for like $10, right? A $10 risk. And it so happens that I've been noticing that this big of a stop is too much, right? Maybe I decrease it to $5, right? That's an improvement that you can make, but you have to see it in a long string of your trades. Or if you say, I put $10 risk in, but I keep getting stopped out, and every time I get stopped out, it always climbs a lot higher. Then that could be an indication that, hey, instead of making it smaller, maybe I take on a little bit less, a little less shares, but I increase the risk that I'm willing to put in to give it more breathing room. Maybe I, instead of going to 15, $10, I move to 15, a $15 stop. So it gives you, by doing the analysis like what I'm doing here, you don't have to do the same way, but you have to come up with a plan of how you're going to trade. And by doing that, you have things that you can improve upon. If you do it the same way, every time, you can say, hey, I can adjust or tweak it, my stop a little bit, maybe make my stop a little bit long more. Or when I'm looking to enter, maybe I enter when I see a little bit more of a support, or maybe I enter on the upside when, well, not when it's going down, but when it's going up, right? So an example of that would be, um, let's look here, right? So here it's going down, right? Price is going down here. Maybe instead of entering when price is going down this way, you enter when you start seeing a few more green candles to the upside here. And you actually enter here, but you set a stop at the swing low here, right? So this is your risk right here, this area, right? So your entry here and your stop, right? But that's another way that you could play. And just by doing that, it can show you what you are comfortable with, over time, what you are comfortable with and what has done well for you. And of course, you want to log everything too. Not just look at your statement at the end of every day or every month, but keep a journal. And in your journal, you could just have you could just say, write things down like, I took a trade in SPY today. I got in at 470 and I set a stop for 460. And as the days go by, you update it with it. If you're day trading, that might be way too slow for you. That's why I don't encourage beginners to start with day trading, because you have to do all these decision makings. Um, you can't do it like the night before because you're day trading. So you have to do it on the fly, and it doesn't give you too much breathing room to write these things down and to slow improve upon it. It does allow you to trade a lot faster, but it doesn't allow you to monitor things on the fly, right? So you want to take it a little slow, and being slow isn't a bad thing. You want to get it slow first, right? Because slow is smooth. And once you get it smooth, you can improve, add speed to it, right? Eventually, you get to the point where you're day trading. But enough of me ranting. I just wanted to share with you guys today, and I was trying out a new pen thing where I was drawing on the screen and just pointing it out because I want to make sure that you guys are following my thought process too, as a way to help you guys out. And if you guys like how I'm entertaining this or how I'm thinking through my trades, like this and more positions and just different thoughts of possible positions for the next few days or whatever, please let me know in the comments. You know, in the comments, or just message me directly. I'm always looking to improve, because the more I improve, it one, it helps me, and two, it helps you guys, because I need to know if whatever I'm doing is also helping you guys. And you know this is a selfish project of mine, to that I'm hosting this, to force me to do the analysis and plan my trades, but also it is a way to also help you guys. You know, so definitely give me some feedback, and if you guys like this style of me annotating it and showing it and just stepping through it. Um, so with that, we'll end it here. Everybody stay safe. I know we're having a big increase of COVID cases again, so stay healthy, and just God bless everybody. But thank you. Have a good night, everybody.